3, 2, 1. Mic test. Yep. So, what's going on, everybody? My name is Stefan, and today is 14th of July, Tuesday, 2026. Welcome back to Trading Review series. This is Trading Review number 6. Before we get into today's review, I just want to give you a quick update. If you have been following the channel over the past week, you will know that my first 50K CFD challenge with Fivers came to an end on Friday. So I took some time over the weekend and I went a bit through the trades that I took last week. I analyzed the mistakes and I wanted to see exactly what would be the best to do and how should I approach the new week. So for this reason, I realized that I actually want to make a few changes. And starting with this week, I'm going to start a new challenge and I'm going to focus on NQ futures. The prop firm that I decided to go with is not so important. I'm pretty sure everyone heard about it, but I will disclose it later on. I have no affiliation, or I don't promote them in any way. I'm just testing them as well. So I will come back later on why I made the decision to switch from CFD to futures. For now, let's just jump onto the charts and see exactly how the charts were looking this morning when I came into the session. So what I have here, I think I have the bar replay. Did I put a bar replay? Oh no, I didn't put a bar replay. It's actually replayed all the way. It's okay. We can put the bar replay here. I have the executions. I have the risk to reward tool, and this will help exactly to explain through the trade very, very smoothly. So this is New York Open here, 9:30 a.m. I have my sessions marked. If you know, I don't think I went through this, but we could go into this on another session, or just leave me a comment. Leave me a message in the comments and let me know if you want me to make a video on how I mark my sessions and everything else. But for now, I'm just gonna talk about the levels really fast, the levels that I have on the chart. So starting from the weekly, normally I start on the daily, but we can look at the weekly because this was an interesting week. We actually closed very bullish last week with an engulfing candle. We swept all this liquidity. We closed bullish, and I guess most of us traders were expecting to see some continuation to the upside. Now, is it early to say? It's only Tuesday. This candle can expand higher, of course, but right off the bat on Monday morning, the price just decided to sell off like it was a sell-off day yesterday. We had a retracement here in Asia, and afterwards we just literally sold off throughout the day. Now, what you see between the vertical lines, the dashed lines, are the overnight session, or what I call pre-market highs and lows, which I delineate with horizontal lines at the levels where this pre-market session is basically comprised in between highs and lows. Afterwards, I have the closing price marked of Monday, which is 16 New York time. Everything that you see here, the chart is in New York time. You can see it here at the bottom. The other lines that I have on the chart, you can see is previous day low, which was right over here. I think I'm slightly inaccurate. Am I? No, it's exactly there. Yeah, it's exactly there. Let me quick have a look. 386.75, 386.5, sorry, 386.5, yes. The closing price I said, and the next thing that I have, which is also of high importance for me, it's the 8 a.m. candles high and low. And more so today, you will see why, like in all the other videos that I made, today we had CPI as news, which dropped at 8:30 a.m. Okay, this is 2:30. This is the local time in Central Europe where I am. This is basically 14:30, and this is actually 8:30 New York time, because I'm 6 hours. I'm 6 hours behind. We're ahead or behind. Well, when it's 2:30 here in the afternoon, it's 8:30 in New York. Anyways, so I was looking at this when New York opened, and I said, okay, what would I like to see? We had an expansion from Asia, a consolidation in London, and we created all this range of price action here. And what I wanted to see at the open, I wanted basically to see lower prices. This is what I was looking for, not necessarily for the whole day, but my first trade idea was I would like to see lower prices. Into where? Maybe into this 8 a.m. lows, maybe eventually into this London lows where we created this range of price action, which was a very, very good pool of liquidity. So let's now get into it and see exactly what has happened. I'm going to start to replay the candles. So basically the session open, we're sweeping some liquidity here. I'm not willing to enter because I don't know, this can reverse at any time, especially that the CPI came very, very good for the stock market. It was negative minus 0.4 or something like this. And year over year is minus 0.4 month over month. And year over year, I think it dropped at 3 point something or 2 point something. I can't remember precisely. Anyways, it was good data for the stock market, not so great for the US dollar, which dropped down. So I was looking at this and I said, okay, I'm not really willing to sell here. Why? Because we have a liquidity pool. I want to see a bit more price action. And this is the candle. This is the CPI candle. And one of the things that I'm constantly looking for is a rebalance of this candle or trading below it or just retesting this level. And afterwards, if it is that the price shows a continuation and it proves that it wants to stay like bullish, only then I'm looking for longs. But before that, when we have a candle like this, I'm looking mostly for shorts most of the times. Depends on the context, but most of the time. So let's go ahead and replay. Here would have been a very good signal for a short at this candle. I didn't take it. I hesitated because again, we had this liquidity pool taken and I thought we can at any time come higher. We come down, and what happens? I decide to take a short here. Would I call it FOMO? I don't think so. I wanted to say that I took this because I thought it's a momentum candle and I thought that we are going to deliver towards the 8 a.m. lows, which if you followed my previous videos, you know it's a level that I trade towards and I trade off it most of the times. I don't hold for long terms. Most of the times I try to trade reactions, especially in the NASDAQ, but a lot of times it also offers setups like it sweeps and it goes from that level, it goes and trends throughout the day. So let's see what happened here. I enter short in this trade and I'm saying to myself this, I said, okay, I'm looking and I see that the volatility is really high. I said, okay, I'm going to put my stop slightly higher to allow the trade room to breathe. And what happens? I'm getting tucked in and I'm getting tagged out in absolutely 4 minutes. Mind you, I entered with the minimum contract size that I could. I am on micro E-mini NASDAQ. I'm not on E-mini NASDAQ. I'm on micro E-mini NASDAQ. One contract, it's the equivalent of $2 per point movement in the NASDAQ. So if I entered at 693 or 694, 693, and I exited at 785, that's about 90 points. 90 points multiplied by $2 per point movement, that's about 180 points. Given my recent rules that I designed for this challenge, and let's have a look here. Not here, my bad. This is the week that we're looking at. So today is Tuesday. These are the rules here. Maximum daily loss 250. If session reaches 500, I'm not allowed to finish the session on negative. Maximum initial position can be maximum 2 micro contracts, and I'm only allowed to add to a position after the market has moved in my favor and I have already reduced risk. So given the fact that my maximum daily loss is 250, because at the moment I'm only going to trade New York at least for a while, so maximum session loss is the same as maximum daily loss. I was already down here $180, so I only had available $70 to trade. And I was like, okay, I was wrong. Maybe I shouldn't have shorted into the origin move of the CPI candle, because more often than not, you will get a reaction. But however, I still wanted to see shorts, and where exactly my eyes were going constantly here into this level, here into this level. I didn't know exactly be it here, but at least the 8 a.m. lows. So let's see what happens next and how I allocated my last $80 or $70 of risk. Actually, I didn't took 70. I didn't take 70. I originally took, I think, $60 of risk, but let's see. And afterwards I reduced my stop. So price starts to come down. I'm looking at this and I'm saying, okay, I don't know exactly what's going to happen, but I'm looking at the 5-minute structure here, and I don't trust this as going higher from here, especially that we traded and we closed this gap completely. I was willing to wait for the price to come on the way down, and I was basically hunting to see if I can get into a trade, this time with only $70 left of risk. So I'm looking at this, and right at this candle here, I'm gonna stop playing. Right when I saw this candle, I said, okay, we had 2 taps higher. We tried to push higher, we couldn't. Now we failed to create a higher high in 1 minute here. I am willing to take a risk here. And what I've done, I entered in my original stop. So you understand, I had $70 left of risk from the day. My entry was at 773 and my stop was somewhere at 803, I think, to cover like 30 points multiplied by 2. That's $60. That's pretty much. I could have gone like 808, but I think I went 803 if I'm not wrong, 803. But what I've done when I saw the price going into my favor, like you see this candle here, I said, okay, I'm not willing to let this, even though I had enough allowance for the session, I decided to put and to move my stop around here at 795, because I said to myself, if we are coming and we are taking this high with momentum, then I might gonna get slipped, and I'm gonna get again into the bad habit of getting slipped because I didn't account for my maximum session loss, and instead of finishing minus 250, I'm gonna finish minus 270 because I didn't think that I'm gonna get slipped. And getting slipped, it's a real thing. It happens. Like you can get executed 10 points, and with one contract 10 points further from your stop, that's easily what, $20. So you get slipped and you breached your maximum session loss, and I didn't want to do that. So I reduced my stop, and let's see what happens next. Price comes higher, takes me out, and we have this candle, and afterwards price reverses. At this point, I only have $20 left for allowance. I obviously cannot get into a trade because that allows me only 10 points of a stop loss, and I cannot enter in the Nasdaq at the open with a 10-point stop loss. I mean, I can, but I have to be deluded to think that I'm gonna get executed in 10 points. So I didn't want to risk to breach my rules. I wanted to stay within the risk parameters. So I was looking at this, and I was looking at this, and I was looking at myself, and I said, why did you take this first trade here, Stefan? Why did you take it? And I started to blame myself that, you FOMO'd, you took it because you were afraid that it's gonna go without you. And I said, yes, but also I betted on momentum. Now, what happens with me is that I realize that whenever I try to trade momentum and breakouts, because basically what I was betting on here is that we're just gonna break down until down to these levels here. It never works with me. And I said this in one of my videos last week. It never works with me. Every time when I'm trying to get into a momentum trade, it just reverses on me. Look here. It took me 4 minutes to lose $200. It's okay, but this is not my trade. I would rather lose 3, 4, 5 trades in a row like this, like 30, 40, 50 points. 30 points multiplied by 2 was that 60. So I can lose 3, 4 times and try to get into a trade here at a sweep of liquidity than to try to get into a trade here and afterwards having this happen. So let's see. I was already out. I was just assisting, looking at this. I got very, very angry, I might say. I was so angry. I was like, if the market was a person, I would go rough and tumble with you. Like you and me, head to head. This is exactly what I was saying. I'm gonna be honest. Like, I don't think I'm alone. I think it happens to every trader that has a thesis and gets taken out and sees the market doing what he wanted to see it doing. So there are 2 types of pain. The pain when you are taking a loss and the market keeps on going in the direction where in the opposite direction of the one you forecasted, And that's also very painful because you start to doubt whether your knowledge is enough to be in the markets. You start to question your judgment and whether you are good enough for the trade. So whenever is a trade, for example, when you want to look for buys, but the price keeps going down, 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 and you look at the chart and you're like, how could I have gotten all this so wrong? Because we trended down all day and I was looking for buys all day, or I was looking for buys at the beginning of the day, and I got burned a couple of times. Now, that's the first pain. The second pain is when your actual bias is okay, even if it's a short-term bias like I have here in the 1 minute, when your bias is okay, but you get taken out and your session risk allowance says stop, you cannot trade anymore. And after that, what you see is that the trade goes where you wanted it to go in the next 20 minutes. It's painful. I'm telling you, this is painful, but it happens. And I'm not the only one. We're all traders, and I think everyone goes through this. But I just wanted to share this with you because it felt so intense. Now it's evening, is about 6 hours after this happened, and I feel much more relaxed. Like I realized that time cures everything. So every time when you feel very, very, very overwhelmed by a trade or by an emotion that you have, something negative, just try to step away from the charts, and you will see that time, couple of hours, even going out, exchanging 2 words with somebody, saying hello, walking your dog by the river, whatever it is, taking your bike out and going for a ride. It helps you forget, it helps you disconnect from that intense fight response that you have in the moment. I have to admit that I struggle a bit with vengeance. This is who I am as an individual. I'm trying my best to be aware of these emotions, but yeah. So going forward, this came down all the way down to 8, to where I wanted to see it, to the 8 a.m. low, and look what happens here. The 8 a.m. low, where I was actually planning to long. So what I was doing here, I was basically trading towards the liquidity, and afterwards I was planning to trade off that liquidity. And let's see what happens. I'm not gonna play this a lot more, but let's see what happens here. It was an absolutely beautiful reaction from the level that I wanted to see, and the day continued higher and higher. Not a lot higher, but we had a good, that's almost 300 points, so it was a really good trade. Yeah, I don't really know what to say other than looking back at the first trade. I think the idea was okay, wasn't necessarily bad, but as soon as I got into the trade, I remember thinking to myself, something doesn't feel right here. Something doesn't feel right here. So deep down, I already knew that this wasn't my setup. I wasn't really confident. I was selling straight into an area where buyers had already shown interest at the CPI candle. So I didn't actually see this, that we were exactly into this level. I was perhaps too zoomed in, because if I saw that we were exactly at this CPI candle, I wouldn't have probably sold. But hey, this is my fault, has nothing to do with anything. Yeah, a few seconds later, minutes, I paid for it greatly. And the trading, the second trade was much more my style, sweep of liquidity. We sold off. It happened that we sold off right after I got taken out, and I could have basically have my risk here at 810. Yes, I would have been a bit overexposed, but I would have broken my rules, because if I was taken out, I would have been passing the $250 allowance that I have for the session. So the main lesson that I can take away from today is that whether I got the direction wrong or right, it doesn't really matter. But what is important is for me to understand where are my best entries happening, and my best entries are not happening in momentum candles, not for me, because I'm a rotational trader. I'm trading reversals quite a lot of liquidity levels, so I don't want to be in trades like this. I will try to write this in my journal and make it very clear. Now, before I finish this, because it's already like, we went for about 19 minutes. Wow, that's quite a bit. My reviews are longer and longer. Not longer and longer, but quite long. I wanted to come back to something that I mentioned at the beginning. Why did I decide to move to NQ futures? And I think this is something very important. It has happened also last week. And one thing that really started bothering me during the last week of challenge with Fivers, if you remember, if you watched the videos, was that I was doing my analysis on trading view and I was executing on another trading view because Fivers does not allow to connect their account to your trading view. So I was basically doing my analysis in a window and executing also on a trading view window, but right next to it. And the more I looked into it, the more I realized that the little differences actually matter, because I had to analyze on a broker and the price feed was slightly different. And since I base a lot my decisions around liquidity, previous highs and previous lows, I want to analyze and execute on the same market and without comparing different price feeds like I was doing the whole last week. So yeah, this was the main reason, not the main, but the first reason. The second reason was just simplifying everything. Instead of trading in the morning the European markets with the DAX and the Nasdaq in the afternoon, I thought, why not just focusing on one single market, learn it properly, and get to know how it moves. I've been studying Nasdaq for a long time, like quite like in close up, but I said, I'm just gonna remove every variable from the equation, and I genuinely think this is gonna help me. This is gonna help. We will see. It's an experiment, but we will see. And finally, it's also the practical side of it. The future evaluations are also generally cheaper than comparable to the CFD evaluations. And since this channel is documenting a real journey, my journey, I have to also think it long term. I don't know how long it's going to take me to become consistently profitable. I hope it won't take too long. And this is very important to me. But if it does, I'd rather spend my money buying experience and screen time than spending it just for challenges to pay the CFD price. And also having to commute from a platform to another when I have to execute. That doesn't mean that I think futures are better than CFDs. No, I didn't say that, not at all. I think CFDs are having their own advantages when it comes to a lot of things. But this is simply the environment that I think it gives me the best opportunity to improve right now. So I will find out whether this is the right decision. Maybe it is, maybe it won't be the right decision, but it doesn't really matter. At the moment, this is the decision that I made, and I'm going to stick to it, and we'll find out together within the next weeks. Yeah, as always, what can I say? If you find this review insightful, if you learned something out of it, if you took something away, feel free to drop a like or a comment. It really helps YouTube to recommend these videos to other traders who might be going through a similar journey or who might want to learn new things or to find a way to trade. And if there's anything that you would like me to explain in more detail, or if you have any questions, just pop them. Don't hesitate to leave them down in the comments. I will do my best to try to go through all of them and to answer. Thank you for watching, and until next time, trade safe, and I will see you in the next review.